Hi there, a very good morning, good evening to all of you, depending on wherever you're watching me. This simply Stocks, and I'm live with another live session with you all. And today, in this live session, I will talk about two of the, you can say, biggest brands in the market that have come down. One of them came down more than 5% today, and they look good for the first. If somebody has not bought into them, then they look good for the first time to get into if you're buying a fresh, and then you can buy more as the stock go down even further. So we'll discuss about all that. We'll discuss about the markets, and I'll answer your queries as well. So this time around, for a change, the session has been in the evening. So let's see how this goes along. If I get time, I'll have sessions in the evening as well. So before I get the session in earnest, let's just discuss about the points globally as to what is going on, and we'll come to the markets point in about 4 or 5 minutes. Uh, so Hi there, Prabal Soni. Hello. I hope you're doing well. And that will help more people to join in as well, as it's an evening session. So, would like to have more people joining in. Uh, Rajsekhar, I'll answer queries later on. But as far as the company is concerned, there's no issue. It's just that the float is low, so the stock has been falling for the past few days. Uh, yes, it's all fine at my end as well. Hope you're doing well as well. So before I get this session in earnest, just a bit of discussion on other events that are taking place globally in terms of sports. So we have the cricket series with South Africa, and we won the first T20 international. Hopefully, we'll win the series. But a big jolt for India with Jasprit Bumrah nearly. It feels like he's out of the World T20, and we have a situation in which Ravin Jadeja will not be there as well. So India is weak on the bowling side. In that terms, the bowling is weak, and so let's see how things pan out in the World Cup. This is a big, you can say, setback for our team, but hopefully we should do well in the World Cup with the way we are batting at the moment. It's going to be a tough group with South Africa, Pakistan in there, and hopefully West Indies qualifying. I think from the qualifiers, one of the qualifiers will be West Indies, so it's going to be a tough group. But let's see how that pans out. It begins on the 16th of October, so looking forward to that. So there are events of the UEFA Nations League that is going on in Europe. So a lot of football going on at the moment. So that's just about it at the moment for sports. Coming back to the market, so it's kind of interesting. So the market had done extremely well to go to 18,000, 18,100, and from there it has corrected more than 7%. And normally in a bull market, in a very good phase, the market corrects around 7, 7, 8%. It is pretty regular, but once this gets broken and we go down further, we could end up going down 10, 11%, or even 12% overall. So in that sense, I'm looking at very lower levels of 16,000 on it, but it seems like that even with in the face of heavy FII selling, the market has stood firm. There has been continuous 2 3 thousand crores of selling by FIIs, but the market has just about broken 17,000. Now, one thing you have to agree with me is that the earnings for the companies are rising, and companies will earn even more, especially the consumer centric companies will earn more as inflation die down, and they make more money because the prices were uh, increased earlier, and you know it that most of the consumer brands do not go back on their prices. So something like a Marico, etc., in the FMCG segment, HUL, Marico, and so on and so forth, with the palm oil prices going down, they'll not reduce the prices that much. So they will earn big time. So all these companies, Page Industries, many mid caps, many large caps, overall, the earnings will pick up. We feel that 850, 860 rupees for FY 2023 and 970 rupees or so for FY 24 is a possibility. Based on that, the market looks very interesting on a 2 year basis. And any company, if you have in your portfolio that is growing by more than 25% on the profit basis, uh, and is not very overvalued. By very overvalued, I mean more than 50, 60 times earnings. If it is not trading at those valuations, then it should end up doing extremely well over the next 18 to 24 months. IT for me should struggle, I mean, for the next 1 or 2 months. And I mean pure IT companies, mid cap, large cap IT, not the new gen companies like InfoEdge, etc., which has fallen a lot. Say a Naukri or a Naukri or you can say FSN e-commerce, Nika, etc. They look very interesting at the moment. Uh, so I'm talking of companies which are more into IT services. They will not perform that well over the next 2 3 months, but over 2 years again, the valuations look good now for most of them as well. So the markets person need to reclaim 17,000 as quickly as possible. The concerning part is that we have not gone to 17,000 at all, and we have not reclaimed that for the last 2 3 trading sessions. So this just tells me that we have more downside left, and we could go in a very short term, say in a week or 2 weeks time, closer to 16,400, 450 or so, and then recover from there. So that's the call on the market, but I'm still extremely bullish on it. I feel that over the next 18 months, by the time the general elections are around, we should be looking at a situation where the market will be closer to 21,000 to 21,500, even from these levels. So a lot of meat left in the market, a lot of meat left in terms of you can say the way the stocks should perform. So stay in the market, stay invested. uh, this channel is dedicated towards medium to long term investing rather than intraday, you can say trading, etc. So all in all, we are fine, considering what the kind of markets have been in Europe, US, as well as in Japan, etc. It has been a complete turmoil, and India has stood firm. So yes, there will be some jolt. There could be 300 400 points decline more on the Nifty, and more in terms of percentage points for the mid cap, small caps. But overall, the markets should end up doing well over 18 months. So yes, we could be about to end this rough ride. We are in October now, the festive season. The market will look beyond FY 23 and into FY 24 from November onwards for sure. So I think the market is set to do much better things going forward. This is the final jolt that we are seeing, and we should be fine in about a week's time or so at maximum. Coming to my two stocks that I have talked about, very interesting that one of them fell more than 5%, and the other one has been continuously going down for the last 7 8 trading sessions. These two companies I have in my long term portfolio, so that's a disclaimer. But they look attractive now for somebody who wants to buy a fresh. He can put in 20 25% now and keep on accumulating on every 5 6% dip from here on in. These two companies, one of them is Asian Paints, and the other one you would have guessed would be Pidilite. These two are very interesting. At these levels, Asian Paints have come down from around 3600, 3620, all the way to 3350 or so. I think you can buy some here and buy more at 3250. I don't see it breaking 3000 in any case, even if the market goes to 16,000. I see it holding 3000. So levels of Asian Paints for me is around these levels plus 3200. Till 3200, keep on accumulating, and I will not be surprised by next Diwali if you see the stock around 4200 or so. I think there's a massive upside uh, potential in the stock. If it falls more from there on in, you can get 25 30%. And that's why once you get, say, in cricketing terms, once you get full tosses outside of stump, you don't miss them out unless that they are way outside and you don't reach it. But this is a clear full toss, or you can say a length ball in cricketing terms, during slog overs. Keep accumulating, buy at 3200. If you get it at 3200, buy big. So you buy 20% now. Any 100 point fall, you buy 50-60% at those levels, because uh, normally these stocks correct 10-12% maximum. In very difficult scenarios they correct at 20%. I don't see these two companies correcting 20%. So in my opinion, Asian Paints is a buy here, and you can say on any decline towards on any declines towards 3200, 3150, big buy, huge buy it will be. I don't see that coming, but if that comes, that's where you end up buying. Now Pidilite at around 2700 at the moment. It had a high of 2920. It has gone down around, you can say, 6-7% again. The stock from the top. Again, you buy 20% here. Maximum downside I see in Pidilite is towards uh, maximum to maximum, it will go towards 2550, 2520 at the worst, but I don't see that happening. So every 50-60 point decline, you buy at 2700, you buy at 2640, and you buy at 2580. Uh, Keep on accumulating, and at 2500, buy big. Don't see 2500 coming in. I think it should arrest the fall around 2600 or so, but keep money to buy if it goes there. Buy big, because these companies give you rewards extremely quickly. So if you if you would have probably tracked them over the last 6 months. It fell big time in June, kept on falling from around, you can say, April, and it made a bottom around June at around 2000, and from 2000 the stock went to 2900. So it gave a return of something like 42-43% in about 3 months. That's how these companies go big over a 3-4 month period. So if you get a chance to buy them 10-15% lower, you can make 30-40% in 6-7 months, not even 1 year, and then probably book that money, because they will uh, continue to be in a range. But I think over 8, 10, 15, 20 years, if somebody wants to make wealth for his or her children, or for their retirements, these are the two big stocks to buy. And once they decline, or whenever they show these types of consolidation or decline, these are the times to buy them big. So Asian Paints, 50% market share in the paint segment, are doing extremely well, even with new players coming in. They have raised prices, still the volume remains the same. The results for June were very good, very strong, and hopefully September, although it's a weak quarter seasonally, they will do well. And then comes the festive season. So everybody talking about festive plays like Dixon Technology, Titan, DMart, and many other, you can say, kitchen appliances companies, etc. But people forget about Asian Paints, and I'm surprised about that, because people go for painting just before Diwali, and they do that, and there's a lot of construction activities that are going on in terms of redevelopment of their own houses. People do that. So paint is always there, and Asian Paints is the leader. Go ahead and buy. And along with Asian Paints, people use Pidilite. People use a lot of stuff of Fevicol, Pidilite during paint, or during any work that takes place at home, any big work that takes place at home. Plus Pidilite has come out with many other products which garner to the middle income group, and they are also selling big time. The results have been fabulous over the last many years, and to continue to be like that. So both the companies are big buy. I think over the next 6 months, they should do extremely well. If you want to trade 6 months, then also these levels look good, and on slight decline, 5-6% decline, buy big. And if you want to invest for 8, 10, 15 years, then also these levels look extremely interesting. So Pidilite and Asian Paints look extremely good. Go ahead and do buy, and leave it for at least 6 months. 2, 6, 8, 10 years, and you'll see the difference in the wealth that you create. All right, guys, I'm ready to answer your queries in the next 5 to 7 minutes. Do use the super chat and super sticker feature that will help you grow the channel. That will help you also ask me questions and eke out answers in greater detail. Be kind. Thanks for the appreciation. uh, Most of us are back and free after 9 o'clock, so yeah, so the thing is, I don't get much time to get online in evening. I'll tell you frankly, what happens is that I don't want to miss matches. So I do watch matches and I do watch sports. So normally I do the sessions in the morning or afternoon, because there are day night matches or international cricket that goes around, or football, etc., at that point of time. So I did get some time here, and I thought that let's have a discussion with you all on markets at this point of time. So HEG should end up doing, when all these raw materials for main products that people make, they go up. At this point of time, what is happening, you need to understand. So on the shorter term basis, yes, HEG looks good, attractive, but you have to understand that what is happening in the global environment, global economic environment. The interest rates are going up in order to curtail growth, in order to curtail inflation, basically, and that indirectly curtails growth. So what happens is demand will go down, and so the prices will go down. Once the prices go down, companies like Philips Carbon, HEG will not make such amount of money, and that is why I have always stayed away from these companies. I have always stayed away from say companies which are like cement, metals, etc., commodities also, because you never know when the tide turns, and it will be very difficult to gauge everything. So it's an avoid. Somebody asked about KPI Green. So again, a disclaimer: I have the stock in my short-term portfolio. I feel that the way they are winning orders and the way they are executing them, and everything that is happening around it in green energy, etc., I have a feeling that we are in for a big move in KPI Green over the next 2 years. So if somebody wants to buy from an 18 months point of view, this looks attractive. Again, Zomato looks attractive. Again, disclaimer: I have it in my portfolio. Around 60 levels look good from a 2 years perspective. Even from a 6 months perspective, I see 80, 85 coming in on the stock. I see big moves coming into Zomato, the kind of accumulation that is going on at the moment. Carlton Crystal, I feel that it's looking extremely weak. If you have a 2 year time frame, then there's no issue. The stock is trading at under 20 times FY 23 earnings. I think the earnings should be pretty good with the festive season around. The only catch here is that, a caveat here is that it sells a lot of its products in Europe, and so we don't know how that pans out, or those numbers pan out already. Although last quarter was pretty good, although there was a lot of issues in Europe, still the numbers were pretty strong. So yes, it looks good, but not from a short term point of view. It has broken all levels. A short term Acrysel should do well after it reclaims 620, 625. But long term basis, yes, one can start accumulating. These are very interesting levels to accumulate from an 18 months point of view. So Bharat Forge is a buy at these levels. I think auto, especially into CVs or companies that are into it, they should do well. The only issue with Bharat Forge is that they sell big time in North America, especially Canada, and they have some exposure to Europe. So probably, if I would prefer buying into a Maruti on declines, buying into any auto ancillary that is selling big here in India, say a Tube Investments or other companies. But if you really want to buy Bharat Forge, then have a 2 3 year point of view, because by then I believe by April to June, in that quarter, in the June quarter, by the June quarter, I think things should be fine with Europe and US, and these stocks, whether IT or export oriented companies, should start doing well by that time. Uh, So Rajesh, Jubilant Foodworks look good at around 600. I think it's a buy. 580 has been a strong support. 720, 730 possible in the next 2 3 months. But I think it should do extremely well post Jan Feb as the IPL comes in, and IPL is from March 15th, 10th, 15th, and all. So 2.5, 3 months of IPL, and there are many events that is about to begin, that are about to begin. Say the World Cup football, you have the Cricket World Cup, and so on and so forth. They will sell big. I think it is a stock that is looking like about to probably blast into something like 40 50% upside. But one should have a patience. You cannot say that it can just give you 40% in 3 months. Although stocks do that, but have a 2 year time frame, it could easily go up 60 70% over 2 years. Jubilant. Rajratan Global Wire, Kapil, very decent company into the tire segment as well, and tires are doing well. Again, a company that if you really know the fundamentals in detail inside out, then go ahead and buy. But overall, by the looks of it, the way the numbers have come out, it looks good. The company itself. So intellect design has fallen a lot. Wait for it to stabilize and only then buy. Do not just jump in and buy into a falling knife. This could just continue the way, as I explained, mid cap IT is falling. Uh, the, that could just continue for the next 2 3 4 months, and this should only resolve once European problems are resolved. Remember, winter is approaching, and they have issue with gas and all, and what is happening with Russia. So things could get very interesting, very, very negative in that sense, if I use the word, for the next 3 months. So probably avoid would be the best way. All are by DMart, Reliance, Bajaj Finance. We don't know how far they can go down, but I think DMart around 4,000 is a huge support. Do not see it breaking that. Reliance, you can keep on accumulating. It's a kind of a stock similar to Asian Paints Pidilite. They they spring back, then they come back big time. So yes, both and Bajaj Finance in the same league. So all are buy at these levels. Happiest minds is an avoid. uh then SGX Nifty 16,700, be kind. We could definitely go to 16,400, but by the time the festive season ends, we could be back at the new highs. So I don't look at SGX Nifty that much. uh Bochi Babu, thanks for being a member here. Foods and Ings, long term, it's a buy. Short term, it's an avoid. Uh, because from a short term basis, the stock has run up, but long term, you can definitely keep on accumulating. The company should end up doing well over a 2 3 year period. Okay. Advanced Enzyme, for me, for some reason or the other, it's a very good company, but not doing that well. So I would say this is a stock that should be avoided for the moment. Look at consumer centric companies to probably buy into. So Somani Home Innovation or Hindware Home is a buy at these levels. If you have it, hold on to the stock. The stock should do well. I still believe over the next 2 years it could do 2 3x from here. But the numbers have been up and down, so numbers have to come in again. Festive season is around. Wait for, so if you have it, hold on to it. If you don't have it, wait for 330 to buy. And second thing is, let this season be over, let 2 more quarters numbers come in, and then take a call on the stock completely. Both are avoid, Gotham, for the moment. I'm avoiding IT for a while, and have been suggesting the same. The numbers may not come in with the inflationary pressure that we are seeing, but the stock may come back because the stocks have fallen a lot. So wait for these companies to take out their 200 if they are below 200 DMA, or take out their 50 DMA if they are below 50 DMA and above 200 DMA, and then buy. So go by technicals rather than fundamentals, because at the moment fundamentals are totally gone for most of the IT companies. So on that regard, the stock should continue to fall, but they may not fall. So that's the call. I've talked about Zomato earlier, so you can reverse the tape, ask him and know about it. Uh, See, Venki's one can start accumulating. It's a very tricky thing again with Venki. I think it should do well during winters, and probably you can exit by Jan Feb. They have a very good distribution network, etc. So the company is doing well, but because of the egg prices, the stock moves around big time. So take that on note as well. Okay. Sanofi is a complete avoid. Look at consumer centric companies rather than pharma at the moment. If you really want to look at pharma or large consumer, then there are other companies to look at as well. Okay. So, Joseph's Sigachi, a disclaimer I have in my portfolio, and yes, you can buy here. I think it is one of the under owned stock, one of the companies that is extremely undervalued in my opinion. uh, I believe that FY23 earnings would be around 17 rupees. It's growing at 40%, but is trading at 15 times 14 times earnings, which is extremely cheap. So I see a PE re-rating in the stock probably next year once the expanded capacity come on stream by March. So yes, it's a buy, but not a short-term buy. It's a 2 3 year buy. That's my call. So Priya, I don't know much about solar industries. I won't be able to comment on it. But GMM Fodler, if you have a long-term time frame, say 3 to 5 years, yes, you can accumulate. Because once pharma start doing well, this is a very good, you can say, play on the pharma space completely. But again, you have to be patient with JMM Fodler if you buy. Uh, Otherwise, I think look at consumer centric companies if you want to really buy from a 5 6 months point of view. Okay. So Bajaj Finance I've talked about earlier. You can reverse the tape. I'm positive on it. I'm positive on Zomato, positive on Asian Paints, Pidilite, Reliance. They all look interesting, but they can fall 5 7% from here. If the market goes below 16,700, then the next level is straight away 16,450, 400. So yes, we could see more fall, but somehow I feel that the fall may not come. The market may open lower, but buying should come in. That's my call. I would say avoid Deepak Nitrite the way it has fallen. Wait for it to go past 2100 to buy. Don't buy a stock when it is falling big time. Wait for it to probably correct, unless that stock is a marquee brand or a top company like Reliance, Asian Paints, etc. And mid cap companies, wait for stocks to stabilize and then buy. Random Loris Labs is a very decent company, but charts look not that great. 460 could be coming in. Uh, uh, 540 it needs to reclaim 540 to have the strength on the charts. But the company is good from a 2 3 year point of view. There's no issue. So that's my call. See, CDSL one can definitely accumulate from a long term point of view. I won't say the same with Moltech packaging. There is a lot of competition in the packaging space that is going on, so that will show on the margins. But CDSL from a long term point of view is a buy. Okay. Okay, Sachin, thanks for your contribution. So you are intrigued by my entry into Zomato. My point of entering Zomato is that the stock has fallen at 40 rupees. It was down 70% from the top. Right now, being at around 60 rupees, it is trading at. So I am looking at market cap sales. If you look at sales, I think for FY24, and this is a 1.5 year trade, unless it goes up big time very quickly, then I may sell. It goes up 70 80% in no time. But it's a 2 year trade at 9,500 crores of sales. I'm estimating for FY24. It is trading at under 5 or under 6 times, something like that. It's at 50,000 crore market cap. Very interesting. It cannot be trading at such valuation. So that is why I bought. Second thing is that their food delivery business has gone into, you can say, uh, not into positivity but at break even. So hoping for them to do better going forward. See, you have to understand that the pandemic thing was over by April, May, or the June quarter of last year. Even from there on in, Zomato has been doing well. If Swiggy was listed, I would have bought into Swiggy rather than Zomato, because I know on the ground it is doing better. But since we have only one play in the food delivery business, pure play into it, I think this is a long term bottom that the company has made, or the stock has made at 40-42. Marquee players have got in, but that was not the reason to get in. Basically, my point to getting into the stock is that it is extremely attractive at around 5-6 times FY24 sales. uh, it used to trade at, and you won't believe, but it used to trade at 50 times, 60 times sales at its peak. So I won't say it will trade at 50 times sales, but I think Zomato can trade at 20 times, 18, 20 times FY24 sales. So that's a big move up from these levels. And probably that's why other people or large investors have got in. So looks very interesting, Zomato at around 60. Priya, both are very good companies. In fact, Artisan Products I've looked at a number of times and thought about buying it when I got into Zomato. So I feel if you have a 2-3 year view, yes, Tarzan products also look good here. But since I go by businesses that I most understand, and that are industry centric, or you can say food or consumer centric, that's why I went there. But Tarzan product is also good. Now Rolex rings, if you can take a risk, it's a small company, yes, you can buy, but it has to be very very less, say 3% of your portfolio or something like that. Okay. I don't. So Hero Motocorp, yes, you can buy as a festive trade, but there are other companies to look at rather than Hero Motocorp that you can buy. Now, one interesting company is KPIT Technology. Uh, it's not into autos, but it provides all the, you can say, mechanisms for EV autoplay, and it is looking interesting even from a one and a half year point of view. So that's the call. All right, guys. Thank you. Thanks a lot for being online. Please do like my video and subscribe to my channel, and also support me on Patreon. Thank you.